Good day, fellow investors! We continue with our irrationality series, and the key topic of today is "This time is different." This great comment by 058279941, Benjamin Graham updated his formula P ratio with each version of the Intelligent Investor. Since we are not in the 70s anymore, we also have to adjust. Taking everything into account, a defensive investor could consider any stock with less than a P ratio of 30. So yes, this time might be different. The most expensive words ever said in the stock market. But let's check. This time might be different actually has a strong fundamental case. Well, you look at the stock market, over the last 14 years, it's up 6.42x. That's insane. Why? Because interest rates went to zero, all financial assets went up, and that's where you get your almost 7x with dividends. However, there is this little itsy-bitsy issue. Interest rates are going up, not down, not at zero. The expectations are yes for those at zero. Therefore, when you look at the Shiller P ratio, cyclically adjusted P ratio that takes 10 years into account, the P ratio is 30, the average is around 16. The S&P 500 P ratio is now 25, the average is around 15. So if all remains equal and the Fed lowers interest rates to 2% next year, as the market is expecting, yes, then everything below a P ratio of 30 is cheap. As Warren Buffett said, if interest rates stay low, stock markets go price to infinity. And now I don't know what will happen to interest rates in the future, but the key question is not whether a P ratio of 30 is okay. The key question is, what if it isn't? Because investing is about risk and reward. I always think in scenarios when it comes to investing. Okay, this is the situation now. What can happen? What can happen? How am I going to fare as an investor if the good times happen and if the bad times happen? Nobody knows what will happen. Even if there is a 1% chance of bad times, you need to take that into account. So what happens here? The current P ratio is 25. If interest rates stay high because of inflation, who knows what, to previously high levels, the P ratio will go to 15, 16, where it has been in the past, and that's something to keep in mind. Now it's high, but if it goes to 17, which is still high, then the S&P 500 goes with the same earnings that it has now, 33% down, just on the P ratio, just going from 25 to 17. And that's still above the historical averages. If the market overshoots a little bit and it goes to 14, which in a crisis usually happens that the markets overshoots, then we are 50% down easily. We are back here in a blink of an eye, and you all are surprised of what can happen. I'm not saying this will happen, I'm saying it can happen. And therefore I'm looking at investing, okay, how am I faring if this happens? How am I if this happens? Both can happen, but I don't know which one will happen. I just have to think, what if it happens? And that's it. That's the only answer you need to know as an investor. If this doesn't feel good to you, then you need to look for alternatives. Value investing, businesses that even if those crash, like we bought Amazon at a certain price a few months ago, and then you collect gems at the right time, move, trade, manage that risk, manage risk. If you can manage risk, then you can protect yourself from the downside. 50% saved by the Fed. That's something you have to always ask yourself when it comes to investing. What if my story isn't right? How do I deal with it? And therefore, the rationality here I want to conclude is not what will happen. Anything can happen, and it's irrational to invest in a way that you are not doing well whatever happens. That's the key fallacy that I feel. Many comments are stocks only go up forever, maybe a little crash here, but the Fed intervenes. I don't know, I hope, but good for you. But my question is, what if it doesn't happen? How do I deal with that? That's when the panic comes in. We have had 3 weeks of crash in 2020, now a little bit bear market that's already cancelled. That's insane, because people expect lower rates. What if that doesn't happen? I cannot predict the future. I want to invest so that whatever happens does well. If you want to do the same, subscribe, check my research platform.